Well, the noise will continue, that's clear, because that's the program coming out of the White House. But I think Trump's honeymoon in that sense is over. And when you look at performance of US equity markets and European equity markets, ever since the election, the European equity markets have massively outperformed the US, and particularly the European defense sector has even beaten the MAC 7. So I think these trends will prevail for the rest of this year for obvious reasons.
And let me just test that theory, because there was a view that, look, a lot of international investors were underweight to the rest of the world. They were just all in on US stocks. So that clear underperformance has now self-corrected to an extent and encouraged by some of the Trump trends. But investors like an entry point, they like to crunch valuations. Why does the US not look more compelling now, given the sell-off, versus, say, loading up on European stocks that already have moved aggressively?
There have been some very fundamental shifts right now, and that means with the German elections now and the abandonment of Ukraine by the Trump administration, and de facto also walking away from the Western alliance, the focus in Europe is really on strategic autonomy in energy, in defense and in capital markets, and that's the key driver. So the single factor in Europe is really now the fiscal expansion on a German level and on a European level, and that has not been expected and priced in markets, and that has medium long-term effects. So in that sense, there will be a lot of backlash on the US, on the domestic front, and also from the international front, and the adjustment for European equity assets has only started.